Legends of Trading, Paul Tudor Jones II. Paul Tudor Jones is a legendary hedge fund manager and philanthropist, known for his exceptional performance in trading futures and currencies and his charitable contributions to various causes. Born on September 28, 1954 in Memphis, Tennessee, Jones was raised in a middle-class family, and his father worked as a lawyer. Starting at his father's small business, the Memphis Daily News, this is where Jones gained his initial experience. He later attended the University of Virginia, where he earned a Bachelor of Arts in Economics in 1976. In order to cover his tuition fees, Jones used the alias Paul Eagle and contributed articles to his family's newspaper. During his time at the university, he became fascinated with the financial markets and started trading stocks and commodities. Upon graduating from the University of Virginia in 1976, he sought an introduction to the trading world from his cousin, William Dunavant Jr., who was the CEO of Dunavant Enterprises, a major cotton merchant. Dunavant facilitated an introduction between Jones and Eli Tullis, a commodity broker based in New Orleans who represented some of the world's biggest cotton traders. Tullis hired Jones and acted as a mentor to him, teaching him the ins and outs of trading cotton futures at the New York Cotton Exchange. However, he was terminated from his role at the exchange by Tullis, who discovered him asleep at his desk after a night of partying in New Orleans. Many years later, he served as treasurer in 1986 and later as chairman of the New York Cotton Exchange from August 1992 through June 1995. In 1980, Paul Tudor Jones launched his own hedge fund, Tudor Investment Corporation, with $30,000 in capital. He quickly became known for his unconventional trading style, using a mix of technical analysis and fundamental research to make high-risk, high-reward trades. He was also an early adopter of computer technology in trading, using quantitative models to identify market trends and execute trades. Jones gained a reputation for his macro trading, with a particular focus on making strategic investments in interest rates and currencies. He also utilized the momentum trading strategy extensively, which involves identifying stocks that have undergone notable price fluctuations and executing trades to benefit from the momentum of the trend. Jones paid attention to news or events that could impact the stock's price to identify potential momentum trades. His approach to momentum trading was marked by discipline and the ability to take advantage of market opportunities in any market condition. His belief in the success of this strategy allowed him to generate consistent profits over time. Risk management was a crucial element in his investment approach, and he utilized several risk management strategies to minimize his losses and maximize his profits. His risk-to-reward ratio is 1 to 5. This means for every dollar he risks, he is looking to make at least 5 more out of each trade. In other words, he needs a 20% hit rate to break even. And he states, "I can actually be a complete imbecile. I can be wrong 80% of the time, and I'm still not going to lose." Jones attributes a lot of his success to his ability to manage his positions and risk. He believed that this strategy would protect him in case of a price reversal. It is natural for losing traders to focus on potential winnings, but Paul Tudor Jones strongly advises against this. He states, "If everyone spent 90% of their time on that, rather than 90% of their time on pie-in-the-sky ideas about how much money they're going to make, then they'd be incredibly successful investors." In an interview with Tony Robbins, he was asked how he determines the trend. His answer was, "My metric for everything I look at is the 200-day moving average of closing prices. I've seen too many things go to zero, stocks and commodities. The whole trick in investing is, how do I keep from losing everything? If you use the 200-day moving average rule, then you get out. You play defense, and you get out." Another risk management strategy that Jones used was the use of options. Options provide the right to buy or sell a stock at a specific price at a later date. By using options, he was able to take advantage of short-term price movements while limiting his risk. Jones recognized the importance of diversification and believed that spreading his investments across different asset classes could limit his overall exposure to risk. He invested in a variety of assets, including stocks, bonds, commodities, real estate, and other investments. This approach allowed him to balance his portfolio and reduce the impact of market fluctuations on his overall returns. His disciplined approach to risk management focused on limiting his losses while taking advantage of profitable opportunities. By adhering to these strategies, he was able to generate consistent profits over time. Jones's trading style is highly coveted by other traders due to his adept use of technical analysis and trend-following strategies to execute profitable trades. His aptitude for identifying and capitalizing on lucrative opportunities in the markets has also gained him widespread recognition. His hedge fund became famous in the financial world for its remarkable performance, especially during the stock market crash on October 19, 1987, when it made a profit of 200%. Also referred to as Black Monday, the market crash saw the Dow Jones experience its biggest one-day percentage decline in history, falling by 22.6%. The event was triggered by a variety of factors, including the increasing tensions between the United States and Iran, rising interest rates, and a growing trade deficit. Additionally, the widespread use of computerized trading systems and portfolio insurance strategies exacerbated the selling pressure, causing a rapid and steep decline in stock prices. The event had a significant impact on global markets and led to widespread panic among investors. In 1988, at the age of 33, the Wall Street Journal dedicated a front-page story to Jones, calling him the most watched, most talked about man on Wall Street. He is also famous for saying, "Don't be a hero. Don't have an ego. Always question yourself and your ability. Don't ever feel that you are very good. The second you do, you are dead." Jones continued to grow his fund's assets under management, which reached $22 billion in 2019. He is also a prominent philanthropist who has donated generously to various causes. In 1989, he founded the Robin Hood Foundation, a charitable organization that provides poverty-fighting programs and services in New York City. Through the foundation, Jones has contributed millions of dollars to education, healthcare, and job training programs. In addition, he is an active supporter of environmental causes and has spoken out about the need to address climate change. In 2015, he pledged $175 million over 5 years to support environmental conservation and sustainability initiatives through his philanthropic organization, Just Capital. Throughout his career, Jones has received numerous awards and recognition for his contributions to finance and philanthropy. He was inducted into the Institutional Investor Hall of Fame in 1994 and was awarded the National Humanities Medal by President Barack Obama in 2013. Jones's success in trading and philanthropy has made him a role model for many in the financial industry. His innovative approach to investing and his commitment to making a positive impact on the world have inspired many to follow in his footsteps. Thanks for watching this video. We hope you've enjoyed it, and if you feel we've earned it, consider subscribing to our channel. We'll be back soon with another video.